Okay, so we're starting chapter 2, lessons using T accounts. We're going to show the relationship between the accounting equation and a T account, identify the debit and credit side, the increase and decrease side, and the balance side of various accounts, and restate and apply the 2 rules that are associated with the increase side of an account. Okay, so last chapter we got introduced to the accounting equation, and this is what we were looking at last chapter, right? So we have assets equals liabilities plus owner's equity. So assets are on the left side, liabilities and owner's equity are on the right side. That should look familiar. Okay, we're going to get into breaking down our accounting equation into accounts. So a record summarizing all the information affecting a single item in the accounting equation is known as an account. And an accounting device used to analyze transactions is called a T account. And debit means an amount recorded on the left side of an account. Credit means an amount recorded on the right side of an account. So when you came to accounting, did you know that debit and credit meant that?
Nope. Didn't even know what that meant in the first place.
What did you think of when you thought about debit and credit?
Cards.
Credit cards, debit cards, bank
Debit,
accounts.
I thought debit was like it's your money that you're taking out of the bank, and then credit is the bank's money that you'll have to pay back.
Okay. So in accounting, debit and credit means something different. Okay, so it's just meaning that debit is on the left, credit is on the right, and that is always the case. It's not always, it's not ever flipped where credit is on the left and debit is on the right. So you got to get that in your mind in the meaning of debit and credit. Put that aside, debit and credit cards, we're not dealing with those right now. Okay, so when you get into analyzing things, which accountants do, breaking things down, then we have to know debit is on the left, credit is on the right. Okay, so we're looking at this equation. Now we're going to break down a T account. Okay, so the assets equals liabilities plus owner's equity. The accounting equation was put on a T account. Got T looking with the lines, left side, right side. And down below it's just saying T account. Left side is the debit side, right side is the credit side. Okay, we're talking about increases, decreases, and balances in accounts. Assets. The assets are on the left side of the accounting equation, and they increase on the left or debit side of the account. Okay, so if we say we paid cash or we received cash, if we received cash, that means we gained cash, right? So that means the cash account or the asset of cash would increase on the left side or the debit side. Okay, so that's assets. Liabilities and owner's capital account, it is on the right side of the equation, and they will increase on the right or the credit side of the account. Okay, so we know if we owe someone money in an accounts payable liability account, that money is going to go into the credit side that we owe that money until we pay it off. Okay, so then that's going to go, that will decrease your credit. The normal balance is the side of the account that is increased. So if you look at assets, which side would be the normal balance? Michael?
Debit.
The debit side. Okay, it increases on the debit side, so the debit side is your normal balance. Okay, it says that right there. Assets have normal balances. That means liabilities and owner's capital account have normal credit balances because they increase on the credit side. Okay, this is just another way to look at it here. We have our accounting equation, assets equals liabilities plus owner's equity. The assets would be any asset. Shown on a T account there, it shows that debit is on the left, credit is on the right. The normal balance is the debit side, and that is the side that increases. The credit side decreases. For liabilities and owner's equity, or liability account, or owner's capital account, just the opposite. Okay, debit decreases, it is on the left, credit is on the right. Credit increases, the normal balance side is on the credit side. Is anybody still confused about this? Some of you were yesterday. You are? Oh, yesterday you were confused. Does it make a little more sense today? Logan? You have to understand this to understand accounting. Because when you start breaking down transactions, you have to think about, is an asset, liability, or owner's equity? You have to classify it first, and then you have to break it down into debit or credit. And then you have to know their balance. Which side is their normal balance side? Michael?
So if it's on the left side of the equation, it increases on the left. If it's on the right side of the equation, it increases on the right.
Yep.
I was going to say,
Unless, yeah, we'll get to that. We'll get to that later in the chapter. We'll get to that. When we get to that, that's a little confusing at first, but then you'll figure out that it's not too bad. Figure out why, but we'll get to that later. Okay, this is what I want you to do on your little card I gave you. And you can keep this. This will be a handy little tool for you to look at. So you're going to draw the accounting equation on a T account. You have to know the accounting equation, which is what?
assets equals liabilities plus.
So if you put it on a T account, where does your line go?
On the equal
On
side.
the equal sign.
Mine's not very easy.
You got to make sure you have your line on the equal sign, not in the liabilities, not on the plus sign. Because everything, this is where assets are on one side, liabilities and owner's equity are on the other side. Then I want you to put under that, I want you to add left side, right side. And then we're going to break it down a little bit further. So we're going to break it down like they have on page 33.
What we just saw.
Yeah. So on the left side, you're going to have any assets. So we're going to go back. Let me go back to that right here. Any asset. So you'll have a T account within the T account in the accounting equation. Yeah. So you'll have assets on the left side. No, you don't have to.
I don't think so.
But I do want you to add though where it increases, where it decreases, and which side is the normal balance. You have to know that.
You also want us to put debit and credit.
I want you to put debit and credit. That should be the very first thing. You don't have to put debit increases. You could put a plus or a minus. I don't care. You can put an arrow. You can put however you can relate to it, so you know what it means.
You want to put normal balance under
Normal balance needs to go under
Yeah, for assets.
debit for assets, credit for liability, and owner's capital.
So basically, anything that's the total balance is.
The increase side is the normal balance side. I know. We're almost done. Okay, you can if you're not finished, you can finish it later. Whoops. Should give you the answer. So the last question here, what are the two accounting rules that explain increases of account balances? Think about it. Think about the accounting equation.
If the normal balance.
Explain the increases of account balances.
Debit and credit.
What is it?
If like one thing goes up, the other has to go down.
True, but we're just talking about the rule for an increase. So what do we say for assets?
The credit or no, the debit increase.
The debit side increases.
And credit decreases on the other side.
On the other side,
Debit decreases.
credit increases. Okay, let's see what they say here. So assets are on the left side of the accounting equation. Therefore, assets increase on the left or debit side of the account. And then liabilities and owner's capital account are on the right side of the equation. So they increase on the right or the credit side of the account. Questions on the accounting equation, how we break it down? Nothing? Well, YouTube. Yeah, I'll put it in Google Classroom probably. Okay, so try to get a good understanding of this. This is the good first concept that you need to know.